What is revenue recognition and when does it take place? Let's talk first about revenue recognition at the point or time of sale of a good. So the general principle guiding the recognition of revenue for the sale of a good is at whatever point ownership or title to that good transfers from the party selling it to the party purchasing it. That is when you recognize revenue as having been received. Now, there are contingency scenarios whereby you would recognize revenue at a different time in this transaction. First, what happens if the item is sold on credit, meaning that the purchaser is going to pay you at some point in time in the future? What you have now is simply a promise to pay. Well, generally you can record this as revenue and should record this as revenue if there is a substantial certainty or a reasonable certainty that you will be paid, at least at some point in time in the future. If that reasonable certainty doesn't exist, that means there is some doubt about ability to pay, you would then wait until there is that level of reasonable assurance in the future or the time period at which you actually receive payment. Next, what happens if the item is to be shipped to the purchaser? Well, in this scenario, the means or method of shipment or the terms of shipment control. For example, FOB destination means that ownership to the good transfers once it is received at the destination. In that situation, that is when you would record the sale as revenue once ownership has transferred, so once it reaches the destination. If it's FOB shipping point, meaning that the point in time in which you drop it off with the shipper or carrier, that is the point in time at which you would recognize revenue. And lastly, what happens if there is a right to return or that the purchaser has the ability to return the item to receive their money back? Generally, you can go either way on this. You can say, one, you're going to record that as revenue, and if the individual brings it back in the future, you would then deduct that from revenue on your financial statements or reports. Or the second method is you simply record it as revenue once that period of return or eligibility for return expires. In that situation, once again, you would simply wait until some point in the future, even though the period of time by which ownership transfers has already passed. So with that being said, these are the general rules or principles surrounding when you recognize revenue at the point of sale.